This is a high volatility move, which also includes a continuation scalp. It includes a breakout scalp. It includes a reversal scalp. And for those who want a more swing-based trade, this also includes a full reversal of the move. Passive entry on a swing type trade. This would be a very, very difficult swing trade to take if you're trying to buy the drop on this one. So let's go and have a little look at this. This is one in the DAX, very, very high volatility, very, very fast move. This drops around about 70 ticks in 3 minutes and then all the way back over the course of the next hour or so. You can see most of that move. You can't quite see the entirety of it, but this does indeed from here turn completely back up the range. So what we're looking at really is, how do you scalp different parts of this move? How do you improve your execution by understanding how to scalp and how a market rotates in different areas? The continuation scalp is about identification of range. The breakout scalp is the pace change. The exhaustion scalp, or the exhaustion and then reversal, comes where you see the market struggle after a quick drop. Then it forms a new range, and now you can play the market back up. So this is piece of news hitting. So DAX drops 57 very, very fast. What you've got to do as a scalper is now try and work out where exactly the market is trading. Trades down towards 25, trades up towards 35. And I'm looking there at where it slows down. So those little points that it slows down, you see it again, sticks at 25 here, back up towards 36. Those little points where it slows down are the points that I'm establishing as a range. Break that, and then you're going to get the next leg down. Once you get that next leg down through 24, 25, then you have the opportunity to try and add on. That's your breakout scalp. But you see that sudden bit of pace has provided a little bit more shake up in the market. It has given the chance for more movement. And so this is where you're sort of sitting at this thing, right? Get through 25, the move's on. In terms of a stop here, if you start trading 39, you're wrong on this trade. You've got at least 10 ticks before you think, yes, there's another leg on this trade. So you're on probably a 4-to-1 risk reward just here. And then once you get the break of 24, now you're looking for the next leg of the move. It's not quite gone yet. 29 trades, 26 trades. You're waiting and watching to see if that break comes. Now you see that snaps through the level. You can try again to sell it now and try and add on to the trade. And you should be a little bit quicker, actually, selling it there. Too slow, market then goes. But that instant drop was enough out of that range to say, yep, you can get onto that trade. You're now looking for the next leg towards the downside. If you've got targets, wonderful. Don't dismiss targets. If you've got a target at 80, 75, 90, wherever it is, put your order there, get out of the target. But this is a trade where now what you're watching for is, where does this stall on the way down? It's the same principle. You're looking at those little moments where things start to change. So market then trades down 96. So you drop down towards 96. It's bounced a couple of times from there. And you see it kind of flicks down. This is the final attempts of people to get this going down. This is where the last hopers come in. And they're, oh no, there might be more. There might be more. There isn't any more on this. It struggles. It struggles. It struggles. So once it's done that, you see it now starts to bounce back up, and we start to form a new smaller range. You got this peak up at around about 04, 05. You see there, bit of absorption as well. Again, another little order flow pattern that you start to see. Once you're up above there, now you can see you can add some bids. It's a more passive entry. So we've gone down, we've reversed back up. Passive entry at 07. You know that you can still buy at 04.5 as well, because that's where that absorption was defeated. And in terms of a target, simple quick scalp target. Your quick scalp is going to be back up towards where this move originally came from, where that first drop was. After that, it's then down to whether you think there's more in this. Yeah, is there a full reversal? And that comes down to understanding context. Context is king in this sense. Scalping is going to help you get better at entering trades, more accurate, quicker, faster to understand what's going on. Context then is what is going to bring this together and turn this into an opportunity now. Even as a scalper, having made a bit of money on the way down, a bit of money on the way back, as a scalper, this is now your chance to get in again and try and play the bigger move back up. You've made your money now. The market has settled down. If you understand the wider structure of what's going on, now you're in for the bigger move towards the upside. This isn't NASDAQ, this is the DAX, just to give you clarity on that one. But NASDAQ, DAX, they do move reasonably similar, both extremely fast. And this is a trade that you have to have this planned out. But as a scalper, if you've seen the way it's traded down already, you've got this planned out, you get your stop in, and you let the market then put in the full reverse, which is going to require more patience. But because you've understood the trade, now you've got a much bigger move at your fingertips.